Barton Biggs says we are in a bear market rally. Do you agree? I don't have the freaking idea what rally or schmally. This is bullshit. Total bullshit. Now here's something, Manny Freeman. Now, listen, Manny Freeman said this morning, they're in the 5th inning of the current bull market. This is also bullshit. The only difference, this is more current bullshit. Okay? I mean, there's always something to worry about. In the 50s, it was depression and nuclear war. The 50s was the best decade this century for the stock market, except for the 80s. Only slightly better. The 80s were only slightly better. People didn't expect a lot. We had an okay, it wasn't a great decade. They just didn't expect much. We made it through. And the stock market was terrific. Do you remember when oil went from 4 to 40? Remember that period? Oil went from 4 to 40, and the experts said it was going to go to 100, and all the countries of the world were going to go bankrupt. And then the big banks are going to go bankrupt, and we're going to have a Great Depression, and the stock market's going down, and you're going to wind up selling pencils and apples. You know, well, I remember when oil went from 4 to 40, and the experts said it was going to go to 100. Within 2 years, oil was at 14. The experts, now much higher paid at this point, are saying it's going to go to 4, and we're going to have a depression. And people believed it again. You know, I remember when the money supply was growing too fast, and they said we're going to have a depression. Then it was growing too slow. We're going to have a depression. Remember the LDC debt? LDC debt. They were all going to go bankrupt, and we're going to have a depression. Then the Mideast was going to own the world. Remember that one? The Mideast was going to own the world. They weren't going to buy our bonds, and the market would crash, and we're going to have a depression. Then Japan was going to own the world. Remember that one? Japan was going to have all the assets, and they weren't going to buy our bonds, and we're going to have a depression. Within 3 years, the Nikkei Dow had gone from 40,000 to 16,000. The banking system was in trouble, and people said Japan was going to collapse, and we're going to have a depression. I mean, people had, on their prayer list, at the end of the day, they had eliminated crippled children and Mother Teresa. They're praying for Japan. I mean, you know. Remember this one. It's futile to predict the economy, interest rates, and stock market. I mean, people keep trying to do this. I mean, this would be useful. I would love to know when we're going to have a recession. I'd love to know when interest rates are going to go up or down. I'd love to know when the stock market's going up. That would be helpful. I would like to get next year's Wall Street Journal. Unfortunately, you don't get it. I remember in 1982, we had a lot of people in this room around for 82. We had 20% prime rate, 15% long governments, double-digit unemployment, double-digit inflation. I don't remember anybody telling me about that in 1980. I remember everybody telling me about that in 1981. But in 83, I remember they said, well, the economy's bounced back. We're going to have a recession in 85. In 85, they said we'd have a recession in 86. In 87, something happened in October 87. I forget what something happened in October 87. Celtics lost 7 in a row. Something bad in 87. They said for sure we'll have a recession in 88. And they said 89 for sure we'll have a recession. And then 90, we're supposed to have the so-called soft landing, which we never had. So I've always said if you spend 13 minutes a year on economics, you've wasted 10 minutes. And all you need to know about the stock market is it goes up and it goes down, and it goes down a lot. And that's all you need to know. Again, it'd be terrific to know what's going to happen in the economy, but I deal with facts. If inventories are going up, if copper prices are going down, if room occupancy is going the wrong way, if people are building too many hotels, I look at freight car loadings when I own railroad stocks. I deal with facts. I don't deal with people tell me something's going to happen in the future. You might as well call the psychic hotline for that stuff. I think you have a better average. Now, what I'd like to talk about is what I call the 10 most dangerous things people say about stocks. Here's a good one. If it's gone down this much already, it can't go any lower. I remember when Polaroid went from 140 to about 107. People said, if you ever get Polaroid under 100, you've got to buy it. You just back up the truck, buy the stock. You know. Stock you get to 110, then rally, fall to 103, you go 112, go 105. They said, gets under 100, buy Polaroid. Polaroid broke 100, people started buying it, and within 9 months, the stock was 18. I saw the same thing with Avon Products. So just saying, it's gone down this far, how much lower? I mean, it's crazy, but, it can keep going. In fact, I tried this out. Kaiser Industries, I was a new analyst at Fidelity, and we were about to buy the biggest block ever at Kaiser Industries. The stock had gone from 29 to 17. We're about to buy the largest block ever in the history of the American Stock Exchange. We bought, I don't know, 10 or 15 million shares. At 15 3/4, I said, my God, the stock's gone from 29 to 17. How much lower can it go? So we bought this enormous block at 15 3/4. So I called my mother and I said, Mom, I guess stock at Kaiser Industries, it's 10. So about 3 months later, I said, you ought to buy this. It's gone from 29 to 10. How much lower can it go? Well, it went to 9, it went to 8, it went to 7, it went to 6, it went to 5, it went to 4. Now, fortunately for me, this happened very rapidly, or I'd be working at the Stop and Shop bag and behind the lines at Stella Fidelity. So fortunately, this was compressed in only about 6 months. So I had to go to the fund manager and say, I was a little bit early on this at 15 3/4, we call this premature in the business. Had a correction, which you know is a euphemism for losing a lot of money rapidly. So I said, let's check this again. The stock's 4. They own 45% of Kaiser Aluminum. They own 59% of Kaiser Steel. They own 38% of Kaiser Cement. They own all of Kaiser Electronics, all of Kaiser Broadcasting, which had 7 TV sets. They own Jeep. They had Kaiser Fiberglass. I said about Kaiser Sand and Gravel. They had a bunch of other Kaisers, and they had no debt. Now, in this room, because I know Freeman Billings is very interested in financial stocks, no one's ever gone bankrupt without any debt. Now, that would take a real, I think you have to give some kind of distinguished service award to somebody who did that. But they had no debt. I said, it's not going to go to 0. You know, I was wrong when I said it can't go below 15. So we hung on, and within 3 years, they gave out the shares in Kaiser Steel, gave out the shares in Kaiser Cement, gave out the shares in Kaiser Steel and Aluminum, and they sold off all the businesses. You got about $55 a share. But if you didn't know the story, and the stock went from 15 to 11, and you're just saying how much lower can it go, when it went to 9, went to 8, you would have gone. So you can't just say it can't go any lower, because I saw Taco Bell go from 14 to 1 in 1974, and they had no debt and making 60 cents a share. There's a corollary to that that's even more dangerous. If it's gone this high already, how can it possibly go lower? Higher, sorry. That. Philip Morris, adjusted for splits, sold for 12 cents in 1951. And then it goes to 60 cents in 1961. So it goes up 5-fold, and you say to yourself, how much, this never sold for that, but just for splits, you say, how much higher can this go? It's gone up 5-fold. They missed the power of Marlboro. They missed there's 220 countries in the world. They missed the cash flow of the company. They missed everything. This stock was a 100-bagger after going up 5-fold. But people sold it just saying, how much higher can it go? Can't go any higher. They did the same at Home Depot. They did the same with Toys R Us. I did the same thing at Toys R Us. Just saying it can't go any higher, it's gone this much already, that's very dangerous, and don't use that one. And it's a very bad thing to do. Eventually, they always come back. Here's another one that sucks. That's a technical stock market term we just use only in the stock market. The RCA just about got back to its 1929 price, was backed out by GE. Manville never came back. International Harvester, even with its name changed and adjusted for splits, hasn't got all the way back yet. Western Union, double knits, remember those wonderful things? Floppy disks. They don't have to come back. But they say eventually they always come back. Not true. Here's a great one. It's $3. How much can I lose? This is a great one. You see, get out. This is, I don't have a computer and I can't do high-level math, but just do this one. So let's say your neighbor buys $10,000 of a stock at 50, and the stock's now 3, and you put $25,000 in at 3. If it goes to 0, who loses the most? A lot of people cannot answer this question. You know, I mean, if you put $1 billion in at 3, you can lose $1 billion. You know, I mean, they blow taps in lots of companies every year. You know, you just have, they can go to 0. I was lucky enough, in addition to having the metals industry when I started Fidelity, I had the textile industry, which is a great group to follow, because you follow companies like J.P. Stevens, was founded in the 18th century, and West Point Pepperell was founded in the 18th century. Burlington Industries was one of the new companies that was founded in 1904. These people have been through recessions, depressions, world wars. They've seen it all. There's a great expression in the textile industry. It's always darkest before pitch black. Now that's a good one to remember, because when business is terrible, it can get considerably terrible. You get terrible to the power of 6. And when I rebound to 10, I'll sell. Here's a great rule. Somebody buys a stock at 10, and it falls to 6. They say, if it gets back to 10, I'll sell. Now, I think the math, 4 and 6, I can handle this level of math. think that's about a 66% return. You ought to buy it. If you think it's going back to 10, you ought to buy the hell out of the damn thing. But they think if it gets back to 10, I'll sell. Now, what you ought to do is never put down a round number, because I think for the next 26 years, the stock will be between 5 and 9 1/4. It'll never get to 10. So maybe put 9 1/8 or 8 3/4. But just saying the stock, if it gets back to what I paid for it, this is a very important rule. This is one of the key rules. The stock doesn't know you own it. So I have no idea when the market's going to go down, and no idea when it's going to go up. I'm totally shocked. The market was 4,000 2.5 years ago. A while ago, it's 8,000. I had no idea about this. Very surprising to me. But I'll guarantee you the market will be a lot higher in 15 years. It'll be a lot higher in 25 years. What it's going to do in the next 1 or 2 years, I don't have any idea. And if somebody in this room knows about it, they're not telling anybody. Or they're not in this room. They're down in Palm Springs somewhere. You know, they've made $1 billion. Or if they know anything about interest rates. Because in interest rates, if you can be right 5 times in a row in 10 grand, you can have $2 billion. There's not that many people with $2 billion. There's a lot of people predicting interest rates. Did you ever think about that one? Just 5 times right in a row in 10 grand, $2 billion. If you write 7 times in a row, you can have the GNP of you know, the United Kingdom. You know, it's a big number. So I don't worry about that. I know we've had 96 years a century, and the market's fallen 53 times. We've had 53 declines of 10% or more. So 53 declines in 96 years. Once every 2 years, we have a 10% decline. Of the 53 declines, 15 have been 25% or more. So 15 in 96 years, about once every 6 years, the market falls 25% or more. That's what we call a bear market, you know that. And it's going to happen. I don't care when it's going to happen. I would love to know. Obviously, it would be very useful to know when it's going to happen. It doesn't make a difference to me. Corporate profits will be a lot higher 8 years from now, a lot higher 16 years from now, a lot higher 30 years from now. That's what I deal with.